Hi, and welcome to Brett's Corner, where we cover everything small business. From how to start a business, to how to grow your business, to how to keep your books, and ultimately how to position and sell your business, and some things to think about after you've sold your business. If you're a small business owner, or you're thinking of being a small business owner, you're in the right place. My name is Brett Hustleball, and I've been a small business owner for over half my career. I started my first small business in 1995. I quickly grew that one to over multi-millions in revenue, and I sold that to a Fortune 500 in 1998. I started my second small business in 2000. I grew that one more slowly to over $1 million in revenue, and I sold that to a multi-billion-dollar corporation in 2014. And now I'm retired. And what I like to do here at the Corner is to share the benefit of my experience with you. So, before we begin, a quick disclaimer. Number one, I'm not an attorney. I will share with you some of the experiences I've had regarding legal issues and what worked for me, but what worked for me may not work for you. If you have specific legal questions, consult an attorney. Number two, I'm not a CPA, nor am I a certified financial planner. But like every business owner, I know my financials, and we'll talk financials, and I'll share with you some of the things that you should know. But if you have specific financial questions or tax questions, consult a professional. Same goes with investment questions. Consult a professional. So, with that out of the way, let's get on to today's video. Hi. Today we're going to talk about how to organize your business, and there are many choices. The first question is, how many of you are there? If there's just one, you can choose to be a sole proprietor. Or you could choose to be a corporation or a limited liability corporation, also known as an LLC. If there's more than one, then you may have to consider some form of partnership, or you could also be a corporation or an LLC as well. So let's talk about those. Number one, a sole proprietor. It's probably the easiest way to start a business. That's how many people will start their business. I myself started my first business as a sole proprietor. Basically, it's you. You're the one doing business. Now, oftentimes you might do business under a name other than your legal name, and if that's the case, then you have to file a fictitious name certificate. But for most states, that's about all you have to do to start a sole proprietorship. It's taxed as you. It's personal income tax. So it's easy. There's no additional tax forms to fill out or anything for a sole proprietorship. As I mentioned, it's the easiest way to start a business. And there are usually no annual filings or anything else you have to do with the state. Now here's the downside. Downside is, since you are the legal entity doing business, you have unlimited personal liability for that business. If your business gets sued, you're the one getting sued. And all of your personal assets are at risk. There are some exceptions. Some states allow a homestead exception, which will protect your house. But other than that, all of your personal assets are at risk, which makes it not an attractive way to stay in business. Most people will start as a sole proprietorship and then change over to some form of liability protection, such as a corporation or an LLC. Let's talk about partnerships. First of all, there's a whole video on partnerships. I will say this about partnerships. I've been involved in several. Approach a partnership as you would a marriage. Consider beyond those first days when everything seems rosy and it's nice to have some additional help and someone to bear the risk with you. Think past that. So most partnerships tend to not work for very long. But let's say you're going to go ahead and form a partnership. Well, the most common partnership is a general partnership. And a general partnership, you would have a partnership agreement, and your state may have a format that they want you to fill out for the partnership agreement, so check with your state. If not, there are forms online. The partnership agreement should define the roles and responsibilities of the partners, how much capital is being contributed, what the share of the business is, minimally, and then other things. Once you have that agreement, you file that with the state. Now you're a partnership. Partnership's taxed same way as a sole proprietor, personally. So it comes through on your personal income tax. Here's the downside to a partnership. Partnership is, especially a general partnership, you as a partner, a general partner in a general partnership, have unlimited liability for anything that partnership does. So, for instance, if your partner goes behind your back and does some business deal that goes south and you get sued, Even though you knew nothing about it, you are as liable as your partner is for anything that might come out of that lawsuit. So beware with the general partnership. Now, there are other forms of partnerships, such as a limited partnership, but that has to do with tax considerations. And then there's a limited liability partnership, which does try to offset some of that liability. So check with your state, read up on those things if you want to consider a partnership. Generally, a partnership doesn't have annual filing requirements, so that's one of the things that make it somewhat attractive to a corporation or an LLC. So let's talk corporations. What is a corporation? So now when we're talking corporation, a corporation is a legal entity in and of itself. You'll file with your state to form a corporation. Once you formed it, it is the legal entity doing business, not you. And as such, it bears the brunt of the legal liability for doing business. And as such, you are shielded mostly from that liability. So that makes it attractive, at least from a protection standpoint of your personal assets. To set it up is a little complicated for most states, similar state to state, but check with your state. But you usually have to file articles of incorporation and bylaws of the corporation. Now, what I've done and what's available to you, I find on the internet there are numerous legal firms which will set up a corporation for you in your state for a fixed fee. It's usually a couple $100, and they'll follow all the paperwork, and they do a nice job. But beware, they're trying to suck you in to be your legal firm after that. So when I did that in Florida, they did a nice job, but then they registered themselves as my agent so that they got all the paperwork. I had to go up, and it wasn't hard, but I went up and changed the agent to me to stop them from getting and pestering me about filings. But you can do that. So how's it taxed? Well, you may have heard the concept of a C corporation versus an S corporation. As far as the state's concerned, there's just one thing, corporation. That's C versus S, that's an IRS designation. And you have the opportunity to elect to be considered as an S corporation. If you don't elect, you'll be a C corporation. So a C corporation, the corporate entity is a tax entity in and of itself, and it is taxed as such. It has its own tax rates. And so any money the corporation makes is taxed by the IRS at the corporate rates. Then you, as either an employee or a shareholder or both, are taxed personally for whatever you're paid in the form of dividends or in the form of payroll coming from the corporation. And some people call that double taxation. So the corporation is taxed. If you're the owner or sole shareholder of that corporation, it's your money. So it's being taxed at corporate rates, and then it's turned around being taxed again when the corporation pays you your salary. And so corporations, C corporations, usually for big corporations. If you're going to go public, if you have big plans, then you might be a C corporation. The S corporation election changes the tax structure. Now it's taxed personally, flows through your personal income tax. You avoid the double taxation at that point. Now our limitations, one of the limitations the IRS imposes is you can have no more than 100 shareholders to be elected as an S chapter corporation. Check with the IRS website, talk to your accountant. My second business was an S corporation, and now my third business is also an S corporation. And that's how I have chosen to organize my business for the advantages of the taxation, basically. Now, corporations have filing requirements, and that differs state to state. Depends on the state. Now, here in Florida, they're a little more lenient. All I have to do is go up to sunbiz.org annually and just reaffirm that the corporation's still none of the information has changed, just electronically. I don't have to have a shareholders meeting. I don't have to have minutes of the meeting. I just go up and file with their online site and pay my $150 each year. But when I was a corporation in Texas, my first business, yes, I did have filing requirements. We did have to have an annual meeting, and we did have to submit the minutes of that meeting and file those with the state. And so fortunately, my attorney took care of that for me and made sure that we didn't run afoul of those filings. So there are some paperwork requirements if you're going to be a corporation. What happens if you say, I'm not going to bother with that? Well, you can choose to do that. You could have your corporation dissolved for you by the state if you choose not to file, so that's one risk. But a bigger risk is if you do that, and let's say the corporation gets sued, there is a legal term called piercing the corporate veil. So that liability protection the corporation provides you doesn't necessarily exist in all cases. If you choose to operate not as a corporation, choose not to do those filings, then legally you're someone who gets a judgment against you may be able to pierce the corporate veil and actually come after your personal assets. So that's one of the things to consider if you're going to be a corporation. You do have those annual filing requirements. It differs state to state. Check with your state to make sure those requirements, you know what those requirements are. An LLC is kind of a hybrid. It's a relatively new concept, like in the 70s. It seems like it's been around for a while, but not nearly as long as corporations have been around. It's kind of a hybrid between a sole proprietorship or a partnership and a corporation, in that it affords the liability protection of a corporation, but it doesn't have the stringent annual filing requirements of a corporation, and it's a little bit easier to set up. An LLC has members, and also it's taxed by default as if you were a sole proprietor or a partner. It flows through your personal income tax. Now, you have the option to elect to be taxed as a corporation. I don't know why you would do that, but the IRS will allow you to do that with an LLC. I personally have found that most of the business owners I know or work with form themselves as LLCs. It's very popular. I have seen no one form themselves as a partnership. So let's talk about my specific experiences. My first company was a C corporation formed in Texas. And there I sought counsel. That was my first business, so I didn't really know what I was doing. And my attorney recommended C corporation, so I followed his advice. And that was good up until the day I sold the company. And I didn't like his advice after that, because what happened was I sold it to a Fortune 500 client who were big and they knew what they were doing. And when they came in and bought my business, they didn't buy the business. They bought the assets of the business. They left it bare. Everything it owned, that's what they bought. And everything that it had as a liability, I kept. So I still had all the liabilities. Any latent lawsuits that might be lingering out there, those were all mine to deal with. The corporation that bought me bought just the assets. But because I was a C corporation, when they bought the assets, that was a taxable event to the C corporation, which meant the corporation would pay taxes on the cash and the proceeds from that sale at the corporate rate. Then me, as the sole shareholder, would get taxed again when that got forwarded to me. So it was almost upwards of 70% tax rate for selling the company that way. And so it was not very advantageous to be a C corporation when it came time to sell the company. So that was a lesson learned for me. That was my personal experience as a C corporation, which is why when I set up the second company, I set it up as an S corporation. And I sold that company, and I didn't have that tax hit like I had as a standard personal income tax to me. So it was about 33% as opposed to 60-some% tax rate. So I've always been a corporation, but as I mentioned, I was a SCORE counselor, Service Corps of Retired Executives, which is part of the SBA, for 12 years. I worked with a lot of entrepreneurs and started a business, and some people that were already in business, counseling them. And most of the people were either corporations or LLCs. That's the majority. I see some sole proprietors, but then they'll pretty quickly convert themselves to either a corporation or an LLC. So the two most popular I see are corporations and LLCs. So if you're going to consider, that's my advice, look at one of those. It's okay to start as a sole proprietor. I did. I was less than a year as a sole proprietor before I moved to a corporation. So I would not stay as a sole proprietor for very long, but it is easier to start as a sole proprietor. So let's recap real quick. Your business organization choices, and you have many. You can start as a sole proprietor and operate as a sole proprietor. You can be a partnership if there's more than one of you. You can be a corporation. The corporation is probably the most difficult to set up, has the most paperwork, and it does have annual filing requirements, but is the most understood and been around long. Or you can set up as an LLC that is gaining, or as I'd say not gaining, it is very popular. That's the most popular thing I see people forming as. If they're looking to limit their liability, they'll form as an LLC. You can form as a partnership, but I don't see many people forming as partnerships. If you like the content we're providing here, please follow us. And as always, if you have any questions, please direct those questions to info@brettscorner.com. I'll watch that email address and I'll respond to your emails. I won't respond to comments you leave on the video, so please use the email address if you have any questions or you want me to respond. And as always, thanks for watching.